Welcome back for another episode of I'm Moving to North Carolina, Now What? This is actually our lending edition, and we have the fabulous Sherry Green with North State Bank with us today. I'm Laura Richardson with Relevate. We are Real Estate Elevated. So we're going to start off with just some real basic questions here. Sherry, give us a little bit more info on who you are and how you got into your industry.
Okay, well, again, my name is Sherry Green. I'm with North State Bank. I am a mortgage lender, and North State is a locally owned community bank. We've been here for 22 years. It is, like I say, locally owned. And prior to that, I was a broker for 22 years. So, North State was one of my investors when I was a broker, so they're local, my underwriting's local, everything is done local, which does have its advantages with all the timelines in North Carolina especially. And the rates were competitive, and they had so many more programs and opportunities that I didn't have as a broker. So it's kind of ironic how I've been in the business for over 40 years, but it's ironic how I actually got in this business because my first real job was at the credit bureau. So obviously, I think I'm a credit expert, but not really. But it did prepare me to get into the mortgage industry. I started as a processor, which I feel like all loan officers should do. It gives me the respect of my ops team, and I have the best in the industry. I know that for a fact. My assistant's been with me for 22 years or more, and so, you know, after the credit bureau, this tells you how old I am. We were actually, the credit bureau got on computerized, so it deleted a lot of our positions, and that was me included, and they sent us on. 5 of us on an interview with a mortgage. Well, back in then, you only had S&L. So I went to a savings and loan, and I got a processing job. Knew nothing about mortgages except the credit aspect of it. And so here I am, 44 years later.
Well, there you go. So Sherry started doing this when she was 12, so
Yeah.
we appreciate that she has stuck with it because definitely a fabulous partner to work with. So let's talk a little bit, because you mentioned a couple of things that we want to tap into here. North Carolina is kind of a fickle beast, right? There's a lot of stuff that we do that's a little bizarre. It might sound like the Wild West when you talk to people from other states about how we do things, but with the lending aspect, there are definitely some things that are national versus local. So what's the benefit of using a local lender?
Well, again, like I said, timelines, because as Laura will attest to, with us having due diligence, that approval, that appraisal, that underwriting, all of those things have to be finalized by that due diligence date. And when it's very aggressive, like it's been the last year and a half or 2 years, and like it's getting ready to be again, sometimes to get the offer accepted, it's 7 days. So if, my customers get me the good, the bad, or the ugly from the start to the finish. And with my operations being here locally, my underwriters are literally on the floor above me. Mm-hmm. So, if we do have a question or a concern, it's not A to Z to get to B. It's something that we can take care of almost instantly. And in this industry, things change constantly, and sometimes it's last minute. So that timing is crucial. And that's an advantage of being local. And, you're only as good as the questions you ask. So there again, hopefully my experience helps in that capacity because I do know the right questions to ask. If you go to an internet company or a big box, you get bounced around like a ball. We want the customer to have the special customer care and that special touch from the start to finish, because the customer ultimately is the most important part to me and what's made me survive in this business for so long. So back to, the timelines, local underwriting, asking the right questions, all those can save the borrower a lot of money, a lot of anxiety, and the seller and the realtors involved, basically everybody in the transaction. So, and being a local bank, we also are involved with all the normal products that are offered, but we also have some portfolio. I'll call it the one-stop shop. Whereas if you need a home equity loan or a bridge loan, if you need a construction loan, if you need personal banking because you're moving here from out of state, we can be the one-stop shop for your banking and your mortgage needs.
Absolutely. So, a big part of what we do is building relationships. And so, that definitely is something that is a benefit to you guys, that you are there from the start to the finish. Because if somebody's looking for a more specialized, product, like you mentioned, for example, the home equity line of credit, so having access to that liquidated asset to make things happen in the contract. Or, for example, you've decided you're not going to build a spec home, you're building a custom home. So, you have to switch to a construction to perm loan. Being able to work with the same person that you've developed that rapport and that trust with is absolutely instrumental to the entire process. And to backtrack for a second, you mentioned something that's really important for folks who are coming to North Carolina, and that's the idea of due diligence. So due diligence, just for our listeners and viewers who are not familiar with that term as defined here in North Carolina. So due diligence is both a window of time, so we're talking a number of days in your contract, as well as the act of actually investigating the home, doing all of your inspections and figuring out, is this really the home for us, as well as the deposit that goes with it that secures that part of the timeline. So we always want to make sure that there are pieces to the puzzle that we're trying to sort out before that window ends. And a big part of that is the appraisal. So making sure that your lender is jumping on it and that you've got that good communication to where the appraisal's ordered as quickly as possible. Because I know that you could probably share some stories of this where appraisals were taking a little bit longer than they had.
I mean, due to the volume the last 2 years, appraisers, they're human. They can we only have so many. Mm-hmm. And the advantage, once again, when you're using a local lender, we're using local appraisers that know the areas. If you're using an internet company, the appraiser could be anywhere. And they may not even physically go to the house. So all that is instrumental as well. But it's just those timelines are just it's like a puzzle. And I personally order my own appraisals because if my processor gets backlogged, I'd rather her be processing and submit my loans, and me and my assistant will take care of some of that front end stuff. Again, it's a team, and I think once you have a good team, it goes seamlessly.
Yeah.
I can't even say that word. See, I'm from the South. I can't say big words.
Well, there you go. Well, and something else, too, with the appraisal, I mean, there was a time period where appraisals were coming in at a different amount than the purchase price. And part of that was the competition with the negotiations. And so there were opportunities, I'll call them, for folks to kind of argue the appraisal. So the appraiser is a third party, right? It's not Sherry going in and actually saying this is what the valuation of the home is, but when the appraiser submits that report back, it's really important to have a partnership with your lender to walk you through what are you going to do if the appraisal comes in under that purchase price. A lot of the consumers probably don't realize that there's a process or a reconsideration of value opportunity there to say, hey, have you considered these other comps or comparable properties? So how are you hands-on in that scenario, like talking to the buyer to let them know they have an option?
Well, again, first of all, if an appraisal does have some gap, and we're not seeing it now, but we did see it the last 2 years, the first person we talk to is the agent, and to see if they have any support. Because that's the first question an appraiser is going to ask, is do you have additional comps that I did not use? An appraiser, again, is proud of what they do. They feel like they're the expert, but you have to validate. You have to give them support, and we have to know that support is valid before we can even go back to the appraiser. Now, loan officers cannot even talk to appraisers. That's nationwide. Mm-hmm. That's not North Carolina specific. It goes through an appraisal management company. We're fortunate enough that we have our own appraisal management company, so they select the appraisers that we have on staff. And they do it on a rotation basis. That's, again, the reason that lender or loan officers can't get involved, is they don't want us to coerce the appraiser to say, hey, meet my sales price, because it is supposed to be support for the lender and for the buyer that this is the value based on market. which is based on comps that have recently sold. But as we all know, we're human, we make mistakes, and sometimes an appraiser missed a comp or they measured wrong, and we can prove that, then they'll do a reconsideration. So again, you have some internet companies and some lenders that are big box that just don't even take the time to review. They just say, this is what it is, now, deal with it. And, this business has hiccups. And again, being proactive, before I ever contact a buyer, I make sure we have solutions. I want to make sure, they're already under so much stress and so much anxiety, and I can't even imagine moving from one state to another, much less just buying in general. But, the more complicated we make it for them, we're the experts. We have to lay it out to them and say, this is our options. This is what we've run into. How do you want to, which way do you choose? And I think they respect that rather than you call them and say, hey, we got a problem, we can't close on time. Number one, that is not in my vocabulary. We want to make every deal work because this is the most important investment a buyer makes, and it's so personal, and there's so much anxiety that we want to ease that stress in as much as that is possible. I'm known as the mother hen of lending in Raleigh, and I take pride in that because those customers are like my children. I'm a mother and a Mimi, and I'm great at being a mother hen.
Absolutely, and I can attest to that firsthand. So in thinking about some other avenues, because you mentioned another key factor here, and that's timeline. So North Carolina is one of the top 5 states that folks are moving to right now. If you look at migration patterns, and I think it's us, South Carolina, Texas, and a handful of others that made that top 5 list. But in thinking about that and how different some of these other states are, like I know our folks out on the West Coast in California, they have a much longer timeline. And there's also a lot more protections potentially for buyers. So if you have somebody who's listing in California and coming here to North Carolina, where our average is about 30 days from start to finish, how do you help them understand that timeline overlap, or why is it important for your lender to be aware of the differences?
Well, number one, if they're not going to close on that house in California, you've got to ask the right questions. You've got to make sure, can we close this house before your house if there's a hiccup and you don't close when you're expected to close where you're coming from? And we make sure all of that from the get-go, from day one, so that we're not out there, because as Laura will explain to you, I'm sure in this episode or another, our closing dates are pretty solid, but we do have a 7-day window. After that 7-day window, your contract is actually void. So, in a very competitive market, we were having to close loans in peak in 21 days. Mm-hmm. So again, that means no balls can be dropped. Everything has to be asked for up front. You have to order the appraisal as soon as they sign the docs and pay for it. You just have, it's a steady rolling ball. I know we are only licensed in 3 states, but I am familiar with a few other states because I have friends and other mortgage lenders that I know in other states. The big advantage of North Carolina is our closing costs are much lower than so many states. I just closed one in a part of Virginia that, it was on average about $8,000 more in closing costs than in North Carolina. We also do loans in South Carolina. But California, everything is so different there. And if, 45 days is their normal, and there's a hiccup and it goes past, I don't think their consequences are quite as severe as they are here in North Carolina with us only having that 7-day window. So again, it's just making sure your team, your ops, you don't overcommit. Again, I always have a conversation with my realtor partners, and they're saying, how fast can you close this? And sometimes I'm not going to say something that I know I cannot live up to. That's just not who I am. So if I know what our capacity is, and we know what our timelines are at North State, I'm going to be the first to say I can't do it in that timeline. And sometimes they're going to want it faster, but that adding another 7 days maybe still can get the contract done. But 30 is definitely doable. I mean, even like I say, we've even closed loans in 21 days before, and I've seen 14. It just depends, especially right now. We could probably do one in 14 days easy.
Absolutely. Well, and I think something else that you kind of have tapped into is accessibility. So being able to talk to the lender and find out what the current trends are, what's even possible, because our market constantly is shifting and changing, both because of the calendar portion of the year as well as just trends in general with where people are moving to and things of that nature. Because I definitely know there have been times where it's been a holiday or it might be the 11th hour and there's a highest and best deadline, and you don't want the client to suffer simply because the lender or the loan officer is not accessible at that time of day. I know I've had some personal experiences where the person that I was working with, for whatever reason, they turned their phone off. And so the client then is kind of left up a creek without a paddle, if you don't mind our southern sayings here, which is not going to benefit anybody. It's not getting the job done. And that's definitely not what we want.
And I pride myself, and I think you can testify to this just like you. I mean, I'm very responsive to returning phone calls every day, emails. I'm Johnny on it. A lot of my customers always laugh and say, by the time I hit send, you're responding to me. And it's not that I just pride myself on that, because if they have a question or the panic button goes off, whatever it is, I want them to know that I'm accessible and I'm there for them, because it's important to them, or they wouldn't waste their time on trying to call or email. So again, you don't get that with everybody.
Absolutely. Well, and North Carolina has a lot of opportunities right now. So we're seeing folks purchase maybe their second or third home because a job is bringing them here. So what are some tips or tricks of things they should be asking about if a job transfer is happening? Because I have seen a lot of that you're basically getting hired by a new company, not just as much of the current company is transplanting you over here. So what are some key factors people need to think about, because we need to backtrack and document income? So as you've seen folks come out here for new opportunities, are there some things that maybe we need to be a little bit better asking about?
Well, I mean, the biggest thing is new jobs in the same line of work is totally acceptable. They don't actually even have to begin the new job before we close, as long as we know a start date and it's before their first payment's due. Where it gets tricky is if they are moving here from another state and a big part of their income is commission or bonus. They got a significant sign-on bonus, and they were counting on that income to qualify, because obviously it is their disposable income. Well, unless we can somehow connect that same pattern with their previous job, meaning that the previous job is doing exactly the same thing, just a different company, and they were making commission or bonus. So the structure's basically the same, just a different company, then we can link them together. But if it's totally different, we only can use their base income. So if they're 100% commission, commission folks are considered self-employed because the income is not stable. So they need to be on the job for 2 years before we can count that, if we can't link it to what they were previously doing. Another big factor is, during COVID, and even still, so many people are still remote. Well, when we have folks coming here from out of state, they are transferring with their company working remote. We have to have a letter from their employer stating that it's okay to move to North Carolina and their salary will still, or pay structure will still remain the same. That's critical. You don't have to have that to write your offer, but I always have that conversation when I'm doing the pre-approval, so that they can have that conversation to make sure that they can get that from their company, because more and more companies are now requiring you to come back into the office at least a couple days a week or month, and if it's from one state to the other, that's going to be pretty hard to do.
Absolutely.
So that's key, and something that needs to be asked up front. That again, if you're filling out an online application, there's not a question that asks that. So you got to have a conversation with your loan officer to make sure they're asking the right questions.
Absolutely, which kind of also bridges to this question about when the best time is to talk to your lender. So we can flesh some of those things out. And before I let you answer that question, which is really crucial, is there are some major differences here in North Carolina, like our finance contingency. We do not have one anymore. We got rid of it in 2019, so there's not a contingency that can be removed like some other states where the buyer is not still on the hook for the home. Now, we do have it in our contract that a buyer can walk away for any or no reason at all, but that due diligence then comes back into play, which can be significant in some pockets of the triangle. So at what point in this journey, because I get asked this question all the time, when am I supposed to talk to my real estate agent about my interest? When should they talk to their lender?
Well, I mean, credit reports are good for 120 days. So typically your pre-approval letter is good for 120 days. But again, interest rates change every single day, sometimes 2 and 3 times a day. So I could pre-approve somebody last month and now the interest rate's a point higher and they're not going to qualify for the same amount. So you have to kind of update them constantly. But I tell folks, if you know you're going to move in the next 3 to 4 months, go ahead and have a conversation with a lender. Number one, if there is a hiccup or something that we need to address that can improve your credit score, because credit scores are linked to your rate. And 1 point can make the interest rate an 8.25% better. So you're saying that's ridiculous, and the credit scores are being revamped to back like they were in 2020 before COVID, whereas in the last few years, one late in the last 12 months would ding your score almost 100 points. Mm-hmm. Ridiculous. Now it's going to go back the way it was previously, where it'll still lower your score, but not that significantly. So because now we're in February and that's going to take place in March, if I put a credit report that was borderline of getting a better interest rate in January, I had a conversation with them that if they're not buying until May or June, we need to have another conversation after March 1st because we'll want to pull again. But you have to be careful on pulling your credit because inquiries do lower the score. So again, everything's a balancing act and a catch-22 in the mortgage industry especially, because if you do this, it could lower this, and it's just to be educated of not to do the wrong thing that could cost you a higher interest rate over the life of the loan.
Absolutely. Well, so in order to wrap this up, Sherry, what are some quick tips or some things that maybe you in particular do that can really benefit buyers in this process? How can you help them when they're moving to North Carolina really understand what they're doing here, or is there a niche area that you are just really good at?
Well, I mean, I hope I'm good at all the products we offer. But again, experience and knowing the right questions to ask helps me decide what's the best program for you. And I give you several options, because even though you're eligible for 6 or 7 different programs, I have a conversation. How long do you feel like you're going to be in the home? Being a bank, again, we also participate in community bank products that the industry as a whole does not offer. Again, we do construction loans. So having that conversation, asking as many questions. I know I wear people out when I hang up with my first consult with a buyer because I've asked so many questions. But that just helps define what is going to be the best product for them in the long run. Because if you don't ask a customer, are you a veteran, and they've never used their VA eligibility, VA is one of the best products you can have. It's a lower interest rate, no down payment. I mean, just so asking the right questions, and asking a lot of questions, unfortunately. But it does benefit the borrower. And again, that borrower is my number one concern, because they are now my new referral partner, hopefully, because I love first-time home buyers, but I love seeing a customer build their dream home, and I also love people that are moving here to be close to their grandchildren and their children, because I'm Mimi. That's what I do best. I can relate. So again, being personal, I think customers appreciate it when they know you're not just a transaction and that you really care about them, and you're appreciative of their business. And that's what we pride ourselves on at North State.
Absolutely. And I think those conversations are absolutely instrumental, not only for the first time home buyers, but for folks who have purchased before, because rules change and we tend to kind of have to grow with the process here. So North State definitely is very hands-on with all of their clients. Well, Sherry, I really appreciate you being here, and thank you for simplifying what could be a very overwhelming piece of the puzzle. And hopefully folks know where to reach you. Her information will be at the bottom of this episode. So if you want to contact Sherry and ask her some questions about moving to North Carolina specific to lending, there you have it.
We'll have you talking like us before long.
I know. Thank you.